How do you see into the future of agriculture? By trading. Today's discussion will cover the agricultural futures market and how they impact us and how we use them. Welcome to Hashknife Hangouts. I'm Calen. He's Brandon. If this is the first time joining the channel, like, comment, and subscribe. Also, a quick search on Facebook, Instagram, and Twitter will allow you to find us at the social media links below. Getting started into today's topic, you may have heard of the futures markets before. Today, we'll cover agricultural futures markets, what they do, how they impact agriculture, and our thoughts on the subject. But first, what is the definition of a futures market? A futures market, if you look on Google, you'll get investopedia.com. That's where I found this. A futures market is an auction market in which participants buy and sell commodity and futures contracts for delivery on a specified future date. Examples of future markets are the New York Mercantile Exchange, the Kansas City Board of Trade, the Chicago Mercantile Exchange, the Chicago Board Options Exchange, and finally, the Minneapolis Grain Exchange. Those are some examples. So what items are traded in this futures market or the futures markets? Things like grains, your wheat, corn, beans, oats, etc. Also meats. So live cattle, feeder cattle, and hogs. We can talk about that a little bit later. What's the difference there? Some of these futures are traded only a couple of months out. For example, some of the items I looked up while I was preparing for this particular conversation this week were trades for November and December of 2021. We are filming right now at the end of September 2021. Now, I have seen some trading as far out as 6 months to a year. It's about in which sector the people want to invest. What makes people determine when they want that time or what time slot they're going to invest in? I'm not sure, because there are many instances, thinking mostly of natural disasters and political changes, where I can see the further you go out, the more likely you are to lose that money, right? For example, if you wagered that this year would be great for hay and production and heavy cattle in Montana, Wyoming, the Dakotas region, you would have lost your money because of the drought that we're currently going through. But how do ag futures impact the trade in our industry? The most common answer is that futures markets enable farmers to deliver a crop or multiple crops at a specified price at some future date. The clearinghouses of commodity exchanges that I listed earlier can guarantee the performance of these contracts. A farmer who's uncertain about prices of his or her produce can cover their risk by selling a futures contract sometime before the harvest day. This came from a quick Google search and subsequent verification searches as a disclaimer. So really, the question is, why would you do a futures contract in the first place? And I guess I'll just, before I go any further, I'll hand it off to Dad and see kind of what his take is and his part or his comments are with that.
Well, to me, the way I think about a futures market is nothing more than traders, just as you would have on the Dow. These are people that are they're buying and selling a commodity for at a delivery on a certain date. Now, when you think about the stock market, every financial planner that you've ever talked to will say, hey, yeah, invest in the stock market. In the long run, it always goes up. It always recovers in the long run. And when you're talking long run, you may be doing 20-year cycle, 30-year cycle, 5-year cycle. Well, the futures market for the commodities, in grains or cattle or livestock, that's a short-term type of commodity.
Kind of what I just said, like long-term is at most a year.
A year, exactly. So Look how much volatility can happen in a year. And you're exactly right. What directly affects that market is drought conditions, or a glut, a trade embargo, or a trade deficit, one way or the other. These can all affect the market in the short term. So, I know one buyer that is currently scrambling because they did good faith contracts on one end with their purchaser, and then on the other end with their producer, and their purchaser's like, ooh, I don't like the way this is going. So they're backing out of their deals. Like, yeah. So
And not only does that
You're gonna
ruin one person's day, that now ruins two people's
a
days.
bunch of people's days
Well,
potentially
yeah, because if
because
that contractor's got 10 different separate items to
right,
fill that one contract, yeah,
right.
you're right.
How many producers does that, so what does that do to them? And
Yeah,
so that's when you're dealing with people who may or may not necessarily be scrupulous on that other end. And you're talking a lot of times on these futures, and that may be a little bit removed. That's not the end buyer, that person who's doing the commodities purchasing or selling that you were talking about earlier. That's another middleman in there that either they overextended, or somebody on the food chain further down from them default in some way. So you never know, and it's pretty dang volatile that way. There's I think a large potential, I'll say that allegedly, even though I'm not a lawyer, for market manipulation.
mm,
Huge potential for that. And that was one of the things, my dad and grandpas, they always said they didn't trust it. Said, look, the market can be manipulated way easily. And it could. You take
right.
a group of people who say, oh, this is all we're going to do. And they know something, you get some insider trading somewhere else that enables them to make a tremendous amount of profit by suppressing the market up front, and then being able to take advantage of a windfall, and they're not going to push that the other direction. Now, with that said, it depends on who you're dealing with too, and this is not a commodities buyer because I don't know any. Just up front, I don't know anybody who's really heavy into, and that's all they do is the futures markets. But I do know a broker who in 2014 we had a really good year. Our markets were high. She had contracted with somebody early in the year, and by the time they got to sale time, when she took delivery on their cattle, the market had went up substantially, way up. And so they're just kind of just sick. That was like, oh God, but that's kind of the chance you take. And here's where this buyer, to me, was like, man, this is somebody who's got some integrity. And it was none of my business. I was off to the side, but she said, look, the market's gone up. And she says, I think you guys need to share in that. So we're going to give you this much above your contract. Like, wow. She didn't have to do that. But
Well,
I
that's
don't
the
know how many.
opposite of what you talked about earlier. That's some good
Right.
faith going the other way.
That's
That's good.
yes. And that told me a lot about that individual, when
Right.
they'll do that. So, but they want to make their people happy. They want to have return customers too. It's a good business, but she didn't have to do that, which, I mean, again, I'm like, that's way good.
Right.
So I honestly, I think the futures markets are very complex.
Yeah,
And
there's a
maybe
lot there. So I following a lot of guys on Twitter,
Mhm.
and very I don't know their intelligence levels, but they have degrees behind their names, right? And they've got some certifications and stuff where they can, at least on paper, they can read stuff pretty well. And they kind of throw some stuff out there in tweets about futures markets and how they're looking for cattle and grain and stuff like that. And I look at it, I'm just like, I know you're dumbing it down because it's on Twitter, because you can only have it
Sure.
explained in so many characters. But holy cow, I do not understand what you're trying to say right now. Like, it's very complex in a weird way, and it,
Yeah.
to me, it shouldn't be. I would think that it could be very easy to understand, but it's not.
Yeah. And I don't claim to know all there is to know, or even a small amount there is to know about the futures market. I know how it can affect us. And let's be honest, most of these people that are trading in these futures aren't necessarily producers.
Right.
Again, they are people sitting at a computer, trading a
Pushing buttons.
commodity, just as if you are trading shares in the oil industry or
Right.
the automobile industry, something like that. That's what they do. They could care less about the producer. All they're caring about is what they're getting it for and what they're selling it for. And they're watching other things like say the price of corn, because corn is king. We've talked about this before on cattle prices. When you have an excess of corn or a large supply of corn, your feed costs normally go down, which enables someone to be able to finish cattle for a lot less, they can pay more for them. That's kind of the way it works, and the opposite happens too. So, corn's a big deal, but also the wheat, barley, uh, sorghum. I mean, you name it, from whatever area of the country you're from, and it's all wrapped up into that. They're watching it. They're trying to predict what's going to happen, just as any other stockbroker would, or trader. So with that, I mean, there's a lot of people that are probably making some good decisions. A lot of luck involved. Timing is everything. We talked about timing of a lot of things. So what happens with that is something that's kind of like magic to me, and I think sometimes it is magic to them. Now, you mentioned that some of these people are, fairly degreed, lots of letters behind their name. Some of the dumbest people I've known in my life have PhDs behind their name.
Well, that's why I say I don't know their intelligence level, but
right.
on paper they should be able to understand stuff.
Right. That doesn't mean that everybody who's got a bunch of letters behind their name is dumb. It don't mean that at all. But if they're doing that, why are they on social media?
Yeah, it's possible. I don't know.
And there's also, you look at it this. Can you create a market by getting on social media?
Oh, yeah, for sure.
There, right? Yeah. So what's the purpose? What are they doing? And if it's purely for informational or exchange of what do you think is going to happen, which could be also kind of wild out there. Look what happened at the beginning of the coronavirus pandemic with toilet paper. What the heck? I mean, what does toilet paper have to do? Right. Well, the Lysol for disinfectant, but the toilet paper. I never heard of a case of diarrhea. Maybe there has been, but people are then bringing that stuff, trying to bring it back to the stores in bulk quantities. Like, hey, tough. So you can start, a run on something, and probably pretty powerfully done through social media. Don't know.
My other question to you is, do you know where ag futures trading originated?
I don't know for sure, but my guess is one of the oldest ones is the Chicago Mercantile, with trading beef and headed to the slaughter plants. I don't know that, but that's just my guess. Do you know?
I did some quick Googling.
Okay. The Google.
Assuming this is correct, because hey, Google is only as good as the user, right?
Right.
Because of course everything on the internet is accurate. This particular source from bebusiness.com, I think it's kind of a thing for business advice and stuff like that. This was just a quick one that said that ag futures actually started in Mesopotamia. If nobody knows where Mesopotamia is, it's present day Iraq. And
you're talking way back, not just in the US. Okay. I misunderstood, but yeah.
Okay, sorry. But yeah, it started with ancient Mesopotamia. It even went into Greece, and people were, who was it? Let me look real quick. It was a famous individual by the name of, oh, dang it, I'm missing it right now. It was nope, never mind. It was a, what do you call him? Philosopher. If I remember correctly, as I was reading through this, he was an old, here you go. Aristotle. There you go.
Really?
Aristotle was actually one of the first persons to promote it, because he said, hey, some people are worried about their olive harvests. There we go. Olive harvest. And we want to make sure we kind of figure this out. Some people on the other end were like, hey, I need to make sure I have business. So they started making early deals of, if I can sell this for a guaranteed price now, that guy knows he's getting his product. And that's really the basis of it, was knowing I could get my price, knowing he could get his product. Wouldn't necessarily know how much, but that he would have a guaranteed product coming from that producer. And then it moved into modern futures. They said were first traded in Japan in the late 1600s. Then there were some crises. London then started taking it over at the London Metal Exchange in the late 1800s, where then the United States, as you said, Chicago was really the big hub. And that was the mid 1800s, around 1848.
Yep.
And that's where some of those contractors, or those trades that you were discussing, and then the Chicago Mercantile Exchange really started taking off of what we know of as the futures market today in 1972. So that's just kind of a quick origin, was all the way from Mesopotamia to where we're at today. And they utilize now, of course, modern technology, computers, I guess live feeds for calls and stuff like that to make those decisions, because now the trading is all day long, 24 hours, because we've got the Far East trading, then they close, then the Mid East opens up, then Europe, then us, and so on and so forth, and just constantly trade.
Yeah, the exchanges are opening up and closing every hour, right? Or as the
Pretty much,
sun
yeah.
as the sun is appears to be moving across the sky, but it's not. Anyway, a little science there. That's interesting, but the premise there. When did Aristotle live? What years?
Oh, dang it!
I mean, it was.
Look it up.
That's escaping me, but I mean, he was the big boy, right?
One of the biggest
first.
guys in Greece at the time. I mean, he's your modern. I guess if you could think of somebody like Elon Musk, everybody kind of knows him. He's not really important, but he is to the United States. Like, that's kind of what Aristotle was.
Yeah. Well, yeah. But when you think about it, whoever come up with that, and he
380
was opponent,
BC.
380. Okay. I knew it was just not too long after the birth of Christ, but I would have thought in the 500s. Anyway, when you think about it, it just makes good sense, because all you're wanting to do is say, hey, I'm going to have a crop. This is what I'm going to need for it. And you got guys that are scratching their head thinking, how can I get this done? Who could I find that would want to buy this? And you've got merchants, they're hey, we'll buy it from you. And they're trading. So it just made good sense, or that would be done in an organized fashion at some point. So, and that's really all it is. But I think the tail kind of wags the dog now. I think that the producer at that time probably was like, hey, I got this amount, and this is what I need to have. And then I'm sure there was some bargaining and bartering back and forth about what is the price. Yeah, I'll give you this much, but it's going to, I can guarantee you I'm going to have this many bushels of whatever, or in olives. I don't know how they sell olives. I mean, that's.
Yeah, I don't either.
Whether it's I just don't know. Probably a bushel or something of that nature, but they're going to say, yeah, I can drop the price because I'm going to have this kind of volume. So I'm sure that stuff all went on. And but that was probably mostly producer merchant driven at that point,
right?
Because
what those guys make? What was their deal? Oh, they're doing
right.
A one unit for this. Okay, let's do a unit and a quarter or something like that.
Yeah, and so, but I don't know, but now it's like, okay, the whole thing is backwards now, because now you're looking at the futures and what the futures market's going to do and where it's standing today, and people are going, ooh. I think we talked about predicting and the timing of when we sell our calves, and you're looking at the futures market and you're going, we should wait to sell. So that's backwards.
That's a great point, because that's where I kind of wanted to go with this towards the end of the conversation, but I think this is just do it now. We were talking when I was home on leave in June. So about 3.5 months ago, we're talking about how we're going to, like, what's the plan with the cows? Cause we don't have enough feed right now because of the drought. We had to cull, and then also understanding what's the timing going to be, because if we need to time it a certain way to make the best price off the calves that we can, we went to the futures market. I was sitting in the back seat of the car while Dad's driving. He goes, look this one up, look that one up, look this one up. And we were going between, I had 5 tabs open on my phone, clicking them open, and I'm literally just saying the numbers out, and he's trying to remember, okay, this one said that one, this one said this one. We're going back and forth. Mom's putting it in her notes and we're all going down the road. But that's important, because
that's exactly a business meeting. You think about it. We're really having a business meeting. That's all it is.
In the car, driving to dinner somewhere or something.
Yep.
And that's, I think it's a really important point, because I've got the stats up right now. Almost every Monday when cattle market change. Yeah, almost every Monday there's a thing on Facebook that I follow called Cattle Market News. There's a young woman who her and her husband work with cattle exchange, cattle prices. I think they're also haulers. They're very in the know of what's happening with these numbers, and they go Monday through Thursday changes, and they get all that information. They put it all together. They package it up into about a 12-minute video that they post every Monday on the Cattle Market News. And I looked at our region, and this is what we currently see. For Montana,
today could change tomorrow.
It could change tomorrow, on tomorrow's Monday, because we film these on Sundays.
Right.
Monday, Montana at 550-pound animals for cattle, they're selling at $1.67 per pound. 630 pounds is $1.60. 720 is $1.65. So similar to the 550. You're asking, well, why is the middleweight not making much money? I don't know. I couldn't tell you. That's probably futures and markets and stuff, and also what's going in the process right now. You'll also look, Wyoming and South Dakota had similar. Wyoming for the 500s was in the 166 range. It was actually higher, and it went lower as the calf got bigger. So when it got to 720 pounds, it was 161 instead of 166. And the same thing happened in South Dakota. The smaller ones, about 570, were getting 169 per pound, and the bigger ones at 730 were getting 158. So actually 11 cents less per pound at 730 pounds. You're asking, well, why is it getting smaller? Well, it's probably volume and stuff like that. We've talked about volume being less money and whatnot. The problem is these are also futures that we're using to look into, okay, what's October look like? And I got some stuff written down here for the comments that I sent to mom and dad. And it said the trends were that the October cattle is dropping, and September itself was up marginally. So over the month so far, they're saying, hey, the month is a little bit, it's steady, but it's up ever so slightly. But we're looking into October futures and seeing that October prices are going to drop. So we're saying, okay, these are the current prices for September of 165-ish roundabout for all of our cattle. However, we're expecting to lose money when we go one more month out, which is a matter of 2 weeks. How do we try and time that? And that's, again, it's the futures market. It's driving us to try and get our cattle in at a certain time, change how we rotate pastures and everything. So with that context, I'll hand it to Dad.
Well, yeah, this is such a fluid, dynamic, and changing thing that I think the tail's wagging the dog again, where we're trying to time where we go because of what we think the market's going to do, because what we're being told the market's going to do. And when you do that with a futures market, who's in control? Who can do that? Now, with that said, there's also about supply and demand. A couple things to talk about there, and some of this I'm just pulling out of my hat. One of them is, I think we all know those calves are getting that 575 to 650 weight, or we'll call it 700, because there's some big, larger calves that are calved in January. They're going to make those 730 weight, right?
Yeah, and the three weights, I'll say them again: Montana, Wyoming, South Dakota. It was 550, 585, and 570. So right in there. Then it was 630, 615, 625, and then it was 720, 720, 730. So those were the three big sizes that they're talking about.
Those are your three class. We'll just call them class weights for whatever reason. Okay, you're going to get a large amount of influx in through your yards into your stocker cattle, into your feeders, because of everybody's shifting their cattle. Those that were on grass and that are now nearly 1,000 pounds or 1,100 pounds, now they're going into your feedlots and they're going to be finished. And those that are feeders, the large end, are going to go to some of those. Now you have a probably a bell curve of, I know there is, got to be a bell curve of your lower weights, your 550 weights, you said, down in there.
Yeah, 550, 585, 570.
Right. So there's a bell curve. Those are kind of some lower end, and then you got your higher end with your 700 weights, right?
Right.
So those are going to be less than numbers than your middle weights, which are your 600 weights. We'll call it 600 weights. Okay. So you got a lot more of those. Those have less places that they can go, or they're filling those up. So that's probably partially why they're dropping the price on those. They don't want them necessarily, because your 700 weights, there's not going to be that much more to finish those. They're not going to have that much more into them. Your 575s are a good weight because they're still younger, but they're going to get a lot of gain on them. They're going to realize a lot of weight gain for them. So you get kind of that awkward in the center where those weights are not necessarily great. You got more of them, more of those numbers of cattle, plus now you've got that number where the profitability is kind of in the center there. That's my thought. Whether I'm right on that, I don't know. It depends on how what they're doing with what they have for land, grass, feed, what they got into them, what they're going to have, on their feed stockpiles. So those are a couple of possibilities for that is what happens. But again, still based on not what we got. There's some supply and demand, but it's what somebody's clicking a mouse saying what they'll pay for something.
Yeah.
And being able to control that, because they can sit on that mouse all day long and say, I'm only going to pay this. Every day that we have those animals, they're going to get way more, they're going to consume more, but at some point you got to sell them. You got to go to town with them or change your operation in some which way where you can sustain them through a winter time or through a later portion of the season when you would want to sell it to realize a little higher price, where there's not so much the glut of animals on the market.
Right. And well, and the other thing too is you also have to keep in mind, for those that are watching, due to the situation with the drought, that can also, as a natural issue, become a driving factor to lowering cost or lowering prices, because there's like you're saying, an influx of cattle, which forces volume. Higher volume results in lower cost because, well, I don't have to pay the numbers because they're all here. They're willing to sell. So I can get something for 15, 20 cents cheaper than what I'm selling right now. But we're talking about utilizing these planning prices from the futures, things we're seeing currently, and we've been doing this for the last few months, what we see currently in the market, what they're expecting in the futures. But this is us talking specifically about trying to utilize the market in a way that we sell by ourselves. We're taking the cattle and we're taking them directly to the auctioneer, and they're sold there in the ring in batches, because they do. There's some videos. Maybe I can share the video from last year. Hopefully Dad will get more video again of this year and share what happens. But it just goes in a ring. But the other option that we alluded to earlier, but we're not discussing currently, I think we should, is the ability to contract. Much like the olives in Aristotle's day, of saying, hey, I have olives, I can give them to you for this price upon harvest. You can do the same thing with cattle and hogs and whatnot. Is, I have this amount of head or projected amount of livestock I'm willing to sell. What will you give me for the contract? Walk us through that a little bit.
Well, and I was talking, we talked a year ago about this when, or after we sold us, we really at the point where we really need to talk to a broker, and instead of just taking them to the auction yards, and start trying to get a better price early on, just as what we do in, like everybody else in this futures market.
Right.
And I did, and was in really good communication with one. Fact is, it was the one that treated friends of ours so well when the prices were up and they'd contracted early. I thought, somebody who's got that kind of integrity, I want to talk to them. So we were negotiating, talking about what we could do and all the things, how to make it happen. And then all of a sudden, the rains didn't come, and we didn't have the flush hay, and the hay prices went up. So that fuel prices went up along with that in order to make the hay. So the price of hay is, we're paying 2.5 times what we normally pay. Huge hit. This is a for us, it's an emergency situation, because now I got to do something. And so we ended up taking about 15% of the herd and culled, and these were pairs. So 15% of our herd went to town. And so now she does not, or I don't have a full load for her, or even a larger load for her to, or she can get somebody else and finish it. And I got a hold of her and I said, hey, I'm sorry, but I'm not going to have enough for a load for you. So there's nothing we can do. But I also understand that she's got brokers or people that are backing out on her too. So that's the problem. So that's how it kind of starts. You start that negotiation process. What can you get me in? But she's basing that again on a futures markets and some of the people that she sells to, and some of the these stocker cattle or finished cattle type producers also. So that stopped a different outlet for us, which we were going to hopefully do better than the market, taking them to town. But if you don't have enough for them to be able to make it worth their while, what's the point? And I didn't want to waste her time anymore. And we're working on some other things about the quality of the cattle. Ours are all, they're grass fat, organic, all the free range, all of that range, or all of the rage stuff, which is going to drive a premium. And we're talking about that for our red cattle. Black Angus have that. They've already got that. A lot more outlets, but we're struggling with the reds. So that's something we have to overcome. But that's where she also comes in to help with that as well. So she's got the contacts. So that started that direction because of the beating we took last year. Well, we're right back there again, where now we're in a spot where we can't hold them, and we have to go through the market again, through the public auction yard. So we'll do the best we can. We hope that, again, these futures markets, which drive that, are going to be up enough that these buyers are going to pay a little bit more for these cattle. The one thing that complicates all of this, we're talking on a normal year, futures markets, the market, what I like to think, when I think of futures market, I think market manipulation. I really do. And maybe that's just because I'm distrusting of it. I see what happens, what could happen, the ability for it to be manufactured, and gluts and dry periods to be manufactured. The thing
How do
that
you think people
complicates,
do that? Like, what are the processes that they do? The things that they are you talking about, like shorting stock and stuff like that? Kind of
yeah,
like if anybody's seen Yellowstone, like how we've we've talked about before, there, towards the end of that third season, Beth is shorting stock and
right.
pissing off the other team, so to speak, because they're trying to take over the ranch and whatnot. So she uses stocks to her advantage. Are you saying something kind of like that in terms of trying to keep prices for us low so that they being brokers, packers, whoever it may be, that they're making more money through
Yes,
a larger profit by selling or buying low and selling higher?
yes, or creating the market so that they can do that. And
Yeah.
what way can you have better timing than if when the time is right to buy and to
Right.
sell? So I just don't trust that. It's just don't trust it. So the thing that complicates that is with this drought and the price of hay, is people are doing just like what we're doing. They're taking animals to town, and that you wouldn't normally take to town, because you got to be able to try to save what you can and purchase high priced hay on the back of that cow and calf that just went through the ring. And that's where it's going to go. It's going to go through those public auction yards, because there's not a lot of people are going to buy your cow and calf for that pair now, because what are they going to feed it? Where are they going to go with it? There's very people that have the grass to do that. They've already got, their own problems doing the same thing. So you've got an increased influx of a lot of these animals early. Now that may or may not help on those lighter weight or midweight calves by the time they roll around in October. Maybe that depresses that large bell curve of your midweight calves. I don't know. We'll find out. I don't think so, because those were lightweight calves going and weren't getting. We got, I think, $1,100 for a pair. I mean, that just was like painful. But you can't feed them. What are you going to do? So you can't. When the price of hay is worth more than the cow, you haven't got a
Right.
lot of choices. So you call
Especially when a
your
cow calf pair like that is only $1,100.
right. And what do you got into them? You got several $100s into $400 to $500 into them for all your feed costs for the year. That's hard. So we just hope that I hope that maybe stretching out the glut a little bit, because those calves are going with those cows, and we went with those in August, end of August, mid-August. Went to town with them. So that's a lot of people were doing the same thing. I mean, there were lines of people showing up to some of the auction yards, like the Lewistown one, that one of the guys there had a video, and he's a broadcaster. His dad took a video as he was pulling in there, and I mean, it was lined up the highway with pickups, trailers, with cattle in them. So, what do you do? the one hopeful thing is the supply and demand. If you can hang on and we get good grass next year, plus we have the complication this year with grasshoppers. Last 2 years we've had a horrible infestation of grasshoppers. So there's some people's grass, the native grass it's been hit, but not like our improved grass.
Right.
So but our improved grasses are it's where we winter our cows, and we calve them in the spring and then we get them off of there, save that grass for wintertime, and then we're gonna be feeding more hay to hang on to them. So it's kind of it can either be the beginning of a counterclockwise swirl of the drain, or we can kind of slow it down, stop it, and turn it around with some better market prices and the demand there, because everybody's doing the same thing. If we can hold on to that, winter that. And this is all a guess. We're gamblers. We don't mean to be, but in a large way we are.
I think something that's not what I intended of this particular conversation, but it highlights something that's important, is you're talking about natural disasters, competition with things like grasshoppers. Now, do we also compete with ungulates like pronghorn antelope and deer? Yeah, kind of, but not really. Fortunately,
not the antelope so much. Yeah,
right.
They're browsers. They're chewing on more sagebrush than especially in the winter time. But they do eat grass. Yeah, they do make an impact. Sure.
You've got, like I said, the insects, those animals. Then you have in this case, a natural disaster, which is drought. And then we've been talking, okay, futures market, trying to get the right prices at the right time. And then on top of all that, the Packers still don't go away. The issues that we have with them, we're still fighting that. It's a very tricky business. And again, try to just kind of inform people about what futures market is and everything, but it's all related. We're coming up, like we just got done filming and in the shoot we've been doing this for a year. All this stuff we've been talking about for a year is kind of culminating into this one big event, one of a couple big events that happens every year. This is kind of the end of the life cycle. It's the fall cycle where we sell off the calves. It all culminates here of, okay, how did the deer go? How did last year go? Which, if you remember, didn't go well with the cattle sale. Then we went into further issues with meat packers. Okay, now second year of grasshoppers. Oh, but wait, high hay prices because there's a drought. We can't produce hay, can't produce grass, not getting the moisture. And now, because of that, it's also another thing where other livestock producers are also selling off. They're calling. We culled up 15%. There's some people, unfortunately, depending on their herd size, they culled 100%. They're done, they're out of the business, they're like, I'm walking away, or they're completely starting over next year. It's that big of a deal, and that hard of a thing to kind of work and wade your way through.
Right. And if they're lucky, and I hope for those that did that, I hope that it works out where for them, they can get back into it, give it a year. If they can weather that and they've dropped their costs where they're not losing as much money, that maybe in another year that they can start to build back.
Yeah.
And you can start doing that by, leasing your grass out. You don't have the cows, but you lease it and you can start slowly building back up. But, these things can devastate a business like that. And if they owe money on their land that they're running, whatever portions of it, or a portion of it has a note against it, a banker is going to stand there and they want their money. Right. If they don't get their money, they're happy to take the land.
Right.
And that's something you put yourself into a position with, but it's not easy. I mean, these are really, really hard times. Now there's a couple other disasters as you're running through those that I can think of that could happen. I don't want them to happen. I'm not going to talk about them, but there are others. And, anybody who's been in who's been outnumbered in a fight, you're just adding more people to that fight, and they're surrounding you and they're getting tighter and tighter. So, you hit the biggest, strongest, hardest, nastiest one you can and put them down, and you just keep wading through them the best you can, knowing you're going to get chunks of flesh taken out of you, but at the end of it, you're still standing.
Now that's the context of all the things, again, we're trying to wade through, but specifically looking at cattle futures markets, again, we're looking at cattle futures. We're not really concerned about grain. We might look at corn because, as you said, corn's king. How does the futures market, we've talked about sales, how does that impact vaccination dates, weaning dates, haul dates, and sale dates for determining when we pick up and take the cattle in to get sold?
Well, that's a good question. Again, that's dependent on if you've gone through a broker and they've made commitments to somebody that they're selling to, a stalker outfit, where they're taking these feeder cattle into graze, and they need them at a certain date because they've shifted something onto a packer or because packers do own feedlots too, the feedlot or in their operation in the feedlots, and they're needing to fill those. They have a certain date that they need because they're moving cattle around, and so they say to you, okay, we're gonna take your cattle on the 8th of October. We're going to have a truck there, or 2 trucks, or 10 trucks, whatever it is they need for that contract. That's the day we're going to sort and gather, sort, and load them on those trucks and go. So, okay, 8th of October, I need to back up 2 weeks to 6 weeks ahead of that, get those vaccinations done so that they're ready to go, because that's all by a contract as well. And so, you vaccinate your cattle, you do that ahead of time. You got to have some time for that. Anything that's that they may have picked up, they, have time to go through that process. And sometimes you'll see a calf that you give them a shot and the snot's running out of their nose. They've got something there that they're fighting, and they're getting rid of it with that vaccine. Fighting that immune system boost is helping them out. So that happens, but you want to have that in time enough ahead of time that you're going to fulfill that for that animal to be transported. So 2 to 6 weeks ahead of that sale date, or that contract pickup date. And that's really what it works out to be. Now, one of the local stockyards here, and I talked to him, it's been a number of years ago, about having some of these cattle. We come through and we verify that they're preconditioned, is what that's basically called. You give them a wormer and their vaccinations, and then they go to sale. And we had taken a bunch of those in, given them the records, and of course they got round filed. And I talked to him about that, and I can't help but think that maybe he didn't start this from that. Maybe not. I don't know. But now he has a specific sale, or several series of sales that are he calls it an enhanced health sale, where you're taking these cattle in, they've been preconditioned and weaned, or they've only had just the shots of branding. They're all different categories, and he tells these buyers what the condition these cattle are, what they've had throughout the year, what kind of mineral program, what kind of vaccinations they had, what series, what the vaccinations were for. And so for like us, we're using the Shield Gold, the one shot, which is a number of things in that, plus the Vision 8 with Somnus. I mean, we're giving these cattle everything we can for protection, and you put that in there. How they've been treated, what their mineral program is, any other special notes you may have done with them, and like fly control, that kind of stuff. So supposedly these buyers are there, and they're going, okay, we're going to get some quality cattle. We're just not getting to get something that's been vaccinated upon branding. You could get that, but this is what's gone on. Maybe somebody's not putting mineral out, or the mineral is garbage mineral, or you'd be better off if they're eating dirt. You never know what some people do, or don't put money into their cattle. So right. With that, they're starting that, and did that last year for the first year. So we're falling back on that with our cattle, and say, okay, well, maybe we'll get a little bit more. It didn't help us last year for sure. And I think it just depends on who's sitting in that ring, and whether or not they're actually going to go by that and go, no, we're not going to pay any attention to that. We're just going to do what we're going to do anyway. And actually had a conversation with somebody earlier in the summer about that it's like, yeah, we're not going to take a chance on somebody saying they're vaccinating their cattle. We're going to vaccinate them anyway, unless they've been, with a third party verification, where you got, somebody saying, okay, we watched you do this. You verified you did this. We saw the vaccine purchases, whatever. as a third party. Then they might do that as an entire truckload, and then they probably won't do that. And you may get a little bit more for it or not.
I said that. I mean, that just makes sense though, because I can see from the other's perspective of how do I know you actually did this?
Absolutely.
You could have just filled in that spreadsheet and just lied to me about it. But I mean, there's a certain at some point you kind of have to figure out are you gonna trust them or not too. So
Well, there is, and there's only, if you let's say you got 200 head of cattle to go in. Yeah, let's
yeah,
say you got, call it 2 truckloads, and you've got you say, okay, this is what I've done, and you haven't done that. Say you haven't done anything with these cattle at all. Let's say you never even vaccinated at all at branding time, and there's people, I'm sure that there's somebody out there that's doing that, and those cattle go into a feedlot, and half of them all of a sudden pick up a bovine respiratory, virus, and all of a sudden they're sick. They've got the brand on them.
yeah, you know
It
who.
came from guess where, and pretty soon you're going to have some buyers going, we will not accept their cattle.
Yeah,
So
you blackball yourself.
you blackball yourself because of your inaction. Yeah.
Yeah.
Or lying about it. So you've got to be, thinking about that as well, and so if you've taken 2 truckloads in and you haven't done anything with them, and they haven't done it because, it's like, wow, they're probably vaccinated because they said they did, and we're going to do that. That's different than maybe somebody going, well, I've got 30 head, not even a full pot, and they're going, you know what, these are mixed with, we're just going to vaccinate them anyway. And maybe
Yeah.
they do that with the ones that don't have a third party verification. I don't know. I'm sure it just depends on whoever's place they're going to or what their operation is. But yeah, you can totally understand why somebody would be like, don't know if I want to do this or not. I'm not going to take a chance. So, there's that.
To kind of wrap this up, it'll probably be a shorter episode. You already said some of your thoughts behind the futures in general, but what probably long term, what are some of your thoughts long term about futures, how we utilize them or use them in the next couple of years, maybe decade? Are they useful? Are they just more of a pain? Do you think they cause more problems, at least for us as producers, than they do anything else? What are your overall thoughts on the market and how they shift based off of futures and trading and whatnot?
Well, when you think about it, we're really thinking about the futures all the time anyway. What's going to happen? I mean, we really do. Even if you're not,
Well, we have
even if you were
conversations constantly of, hey, what if this happens? What if that
right,
happens?
right. And so, I mean, that speculation is there. My issue and my I guess distrust of it is that you've got people that they could care less whether you go out of business or not.
Mm-hmm.
They're not about sustainability for themselves. They're about that quick, what's that lower right hand corner box in that spreadsheet say for me? And so, they don't necessarily care, and that's the problem. You've got too many people that are, I think, maybe unscrupulous, that will do whatever they can to make it for them, regardless of whether that, hey, they're like, hey, you know what, I'll go sell cars next year. If the entire food market implodes, so what? I'll just go do something else, and I've got mine. Don't have to worry about it. But we do think about the futures anyway, whether it's a market or not. I think you do need to have information out there as what is going on with the corn, what is going on with trade, what is happening there. That's still what we base that stuff on, and I thought a number of years ago we had a huge breakthrough with China was going to take a bunch more beef, and then thought, okay, this is going to happen. And once again, I was like, yeah, no, because China always says one thing and then they never
nothing
come
really
back.
changed.
Nothing changed. Yeah,
because I think
or so
I think you're right
minimally
though.
that it doesn't matter.
Yeah, I think you're right though, because we do speculate. We just don't happen to put money down on said speculations.
Well, we do with our product,
Well, yeah,
but
okay.
not willingly.
Right.
I mean, we're just doing. We're having to. We're trying to stay on a surfboard ahead of hitting the right wave.
Yeah.
Yeah, and whether we get behind the wave or we get wiped out by a wave. I mean,
But you brought up some things that I didn't even think about, but you're absolutely right in terms of how we do speculate. Of a lot of times going, I think normally winter is probably when we really kind of start looking at planning stuff, because okay, what's the farmer's almanac say? What's this year say about winter? What are we gonna do for hay? Well, I guess you could say it's even in springtime, because we started looking at then, because then you start looking for hay, contacting people, and so on and so forth, moving down the line. But then, like you said, the policies, we're staying up to date with current ag policies. What does this administration do for trade? What are some of the new things that have been added or removed from certain policies that may or may not impact us? How's that going to cause issues or concerns for X?
Right.
What? Oh, okay. This is now production costs have now increased. Okay. Fuel to do this or that's going to increase. So we're going to have to maybe do this. Or, oh, this is actually increasing in the pharmaceutical world. How's that going to impact our vaccinations or our deworming situation? I absolutely, I didn't even think about that, but yeah, the politics and everything that we're constantly looking at, it does
how about the
impact.
shortage of truckers right now to be able to move stuff and getting that vaccine to you?
Right.
You might
How,
have it
if I'm going to
some
vaccinate
place.
on X date, I need to order by this
Oh, and I
date.
make sure I order our vaccines well ahead of time, just
Yeah.
because of that. If I can't get them here, then I go through another vendor, which has been very good to get them to us, because there has been times when there's no vaccine here, and so I've had to order it, and they get it to me. And the first time I was like, oh my God, I got a couple $1,000s worth of potential problems here, long term. And it came, and I was there, and it was like, oh my God, this stuff is nice. It's cooled. It's great. It's been packed well. Yippee, so that built a little confidence in there, but it's only as good as the supply chain. And when I say that chain, the delivery of it, I mean, there's guys right now that are driving hay trucks. They don't get much rest. I mean,
Yeah.
we had some hay delivered yesterday, and he says, hey, are you going to be here Monday? And I go, ooh, I can't. I got to go evaluate a horse somewhere Monday. And so I won't be here, but Tuesday I will be. And goes, oh, he says, it's no problem. I've got plenty to do Monday, and we'll work you in on Tuesday if you're going to be here. And I've got plenty to do on Wednesday, Thursday, and Friday too, because these guys are running like crazy because hay is moving,
Well, and especially for us right now, they're pulling from Nebraska. So a lot of that's windshield time
Right.
for them to go all the way down there empty, pick it up, and bring it back.
11 hours. And he can't use a pup because of Nebraska's stupid laws.
Yeah.
So it's just frustrating. He's bringing in 37 bales instead of 52 or 54. It's just like, oh my God. So yeah, you're right. We're starting in the wintertime. I'm paying attention to what's the snowpack in the mountains.
Yep.
That's going to impact.
We have looked at that before.
Absolutely.
Those mountains do not look good. We need to start prepping.
Yep. And it's the whole northern tier, this whole western face of the Rockies that affects us. Is that water going to come down this Yellowstone and Muscle Shell and Missouri rivers, so that these guys who actually have irrigated capability, whether it's a pivot, wheel line, flood irrigate, gated pipe, whatever, are they going to be able to make enough hay? Because that's where we get our feed. Are they going to be able to get this at a reasonable price? Can they put it up plenty of it so there's not a huge deficit of hay? I mean, yeah, we're watching snowpack, we're watching temperatures, prediction of temperatures. I mean, the whole thing plays into that. It's everything, and it's not just monthly, but it's almost daily that we're looking at conditions, whether they're getting better, maintaining, or getting worse.
That is ag futures. Some of their origin, where they came from, what they do to impact us, how we base all of our stuff, like cattle sales, care of animals, all that off of the futures, and how it plays into the overall context of how beef is produced, at least in our neck of the woods with Montana. With that, I'll give it to Dad.
Yeah, and again, I'm not a futures expert by no stretch of the imagination, and my distrust of most of those types of things that we've talked about before. You're much more hopeful than I am, and I always prove you wrong. But anyway, yeah. But for those that have stuck with us, you know what? Once again, we thank you till you're better paid.